Everyone is saying the next Bank of Canada rate cut is going to save the housing market. Buyers are waiting, sellers are waiting, and the media keeps repeating the same line. Just wait for the next cut. Everything will bounce back. But here's the truth. That is an absolute lie. And believing it could actually cost you thousands of dollars. Hey guys, I'm Sonny Bhinder, your local realtor here in Surrey, Langley and the Fraser Valley area. Today I'm going to break down why lower rates don't magically fix the housing market, what's really going on right now, and what that means for you if you're buying or selling in 2025. Media, real estate boards, and some agents push the idea that one more rate cut will fix everything. Reality check is, since June 2024, we had 8 straight rate cuts, dropping the overnight rate from 5% down to 2.5%. So the big question is, if 8 rate cuts didn't move the market, why would one more suddenly do it? So let's start with the myth. Every single time the Bank of Canada makes an announcement, realtors all over social media and big real estate boards send out the same press releases. They say things like, "This is it, the market is about to turn around." But here's the reality. Now ask yourself, if 8 cuts didn't bring back the market, what on earth makes you think the next one will? Why would one more little cut suddenly flip the switch and spark a boom? It just doesn't add up. The important thing to consider is rate cuts don't happen in a strong economy. They happen when things are struggling. Bank of Canada does a rate cut usually because jobs, consumer spending and confidence is falling. Lower rates is a warning sign, not a celebration. Whenever there is uncertainty in the market, the prices drop. If buyers have got confidence in the market and there's stability, prices will grow. It's not the rate cuts which makes the prices go up. And here's the part most people don't talk about. Why do rates come down in the first place? It's not because the economy is doing great, it's because it is struggling. The Bank of Canada cuts rates when inflation cools off or when the economy starts showing signs of weakness. Think about it. If businesses are slowing down, if people are nervous about their jobs, if spending drops, that's when cuts happen. And what does that mean for housing? It means buyers get cautious. People aren't rushing into the market if they are worried about layoffs or shrinking paychecks. So, rate cuts aren't a sign of a strong market. They are usually a sign of a weak one. And weak economies lead to a weaker housing market, not stronger ones. Now let's clear up another big misunderstanding. Everyone assumes when the Bank of Canada does a rate cut, mortgage rates automatically drop. That's not true. Yes, variable rate mortgages are directly tied to the Bank of Canada. But here in Canada, most buyers today are choosing fixed rate mortgages. 3 years, 5 years, locked in. And those rates don't follow the Bank of Canada at all. They follow the bond market. That's an open market driven by investors and institutions, and is based on where they think the economy is heading. So the important thing to consider is fixed rates do not go up and down based on Bank of Canada rate cut. It is determined by the bond market. So it's not the rate cut that actually drives the real estate market. The one word is confidence. Markets rise when people feel safe, secure, and optimistic about the future. Buyers buy because they have got good jobs, because they are ready to start a family, because they want a bigger place, or because they are relocating for a new opportunity. Right now, most people in the market aren't speculating on price. They are moving because they really need to. They are buying their first home, upsizing, downsizing, or making a lifestyle change. And sellers, here's the tough truth. This isn't a let's test the market and see type of environment. Last year prices are gone. They are not coming back anytime soon. If you need to sell, you got to get serious, price it correctly, and play the market you are actually in, not the one you wish we still had. Rate cuts don't create a booming housing market. Stability and confidence does. Waiting for that one magical cut is like waiting for a lightning to strike or winning a Lotto 649. The real market movers are jobs, economic strength, and consumer confidence. If you're buying right now, focus on your life, not on guessing where prices are going. If it makes sense for your family, your job, or for your future, then it is the right time. And if you're selling, understand that serious pricing and proper strategy is the only way to move your home in this environment. So the next time you hear someone say, this next rate cut will save the housing market, you will know it's just not true. If you're a frustrated seller right now and you can't figure out how to get your home sold, check out the video I've linked here where I explain exactly what your realtor should be doing for you in this market. And if you're buying or selling in Surrey, Langley, or Vancouver, hit the link in the description and book a free call with me. We'll create a plan that actually works for today's market, not just today's headlines. Thanks for watching, and I will see you in the next one.